Hi, I'm Don Singletary and welcome to the channel. Today I'm going to show you a trade that I did this morning. It's September 23rd, 2021. And I'm going to show you, I usually never trade right at the opening. And if you're familiar with the channel, I always suggest beginners do not start trading right at the opening. Let me show you why. First of all, go back to the market opens right here at 9:30. You can see the yellow cursor circle there. And let's go back to 9 o'clock, and you see, now this is a S&P500 Micro Emini. It trades for $5 a point. And you can see here it goes from 44.05 to 44.06 and 3/4. So that's a change of around $7.50 in 5 minutes. Now, beginners can handle that, but if you first get into a trade, at this trade at 9:30, it moves from 44.06 all the way up to 44.21. That's 15 points. At $5 a point, that's $75 in 5 minutes. And that can be a little rich if you're a beginner, because it can go against you $75 in 5 minutes just as easily as it can go for you. And so that's why I say I never suggest beginners trade at the opening. But I'm going to show you what you have to look forward to when you get ready to do it, and you get fluent, you know how to get in and out of trades, and you've learned your terms and everything. I did a fun trade this morning. It was at about 9:38, right during this candlestick right here. But I have to show you how I entered that order to eliminate a huge risk, because at the time I entered the trade, I don't know if the next move is going to be $75 up or $75 down. So you have to enter a trade like this as a bracket order with a stop loss. And I'm going to show you how I did that. What I'm about to show you is not the trade I did this morning. I just want to show you how to use the bracket order to open a trade. Now, it has a crazy name. Are you ready? It's an OT for open trade. You can open a trade by selling or buying, but OT is open the trade, and then OCO is one cancels the other, what we normally call the bracket order. So if I want to open a trade with the bracket order, I would be entering an OT, open the trade, OCO, one cancels the other. Let me show you an example right here. I'll click on the ask price. I'll go down here to where it says bracket, and then I'll bring my bracket order over on the left, put my screen on the right, and I could say, okay, I want to buy at 44.50. We'll make the math easy, round numbers here. Okay, now see the little lock right there? That means I can change it if I want to. See, I can make it go to the real time, that is real price is trading now, 44.49, or I can click the lock and I can fix it at 44.50. That's how that works. Now, at 44.50, if I want to go to 44.60, that would be 10 points up at $5 a point. That would be $50, as you can see there. If I wanted to put a $15 stop loss on this thing, remember it's $5 a point, the stop loss at $5 a point would be 3 points down from 44.50, so it would be 44.47. And there you go, $15. So I have my opening trade price, the OT, and then over on the right side here, the green and red frames are the close it profit and the stop loss, and one of these will cancel the other. Now, if you didn't have a bracket order and one of these triggered and you didn't use a bracket order, you'd have to remember to go back and take the other order out, or else you might wind up accidentally buying or selling something. So that's why we have this order called the one cancels the others, to avoid that kind of confusion. And that's your OT, OCO. Now, let me show you the live trade I did today that was so much fun, and we'll talk about that for a moment. Now, you got to keep in mind as you watch this live trade, I only traded one contract. Remember, the purpose of this channel is to help beginners learn how to trade in a very affordable way. So I'm only using one contract for that reason. Okay, if you're a brand new beginner now, I'm going to show you this. I'm about to show you is one of those things that virtually all traders do before the market opens at 9:30 Eastern time, the stock market I'm talking about, of course. Now, I get a newsletter. It's free from CNBC.com called Morning Squawk. And it's usually sent out between 9 and 9:30, which is last minute, right before the market opens. But I found out that if I want the same news earlier, it's usually on their website at CNBC.com. But the newsletter is called The Morning Squawk. And think of it as kind of a 5 things you need to know before you trade today type thing. It's a market summary, and it talks about things. Yesterday, on Wednesday, there at 2 o'clock, there was an FOMC announcement that they probably will not raise interest rates until sometime in the year 2022. And this is a generally positive sign for the market. Why? Because when the Fed raises interest rates, and they're very near zero now, which means for businesses to borrow money is really, really cheap. And when the interest rates go up, it costs businesses more money to do business, and it's assumed generally, and usually true, that the business profits will go down. So it's a bearish development when the Fed says they're going to raise interest rates. The good news yesterday was they're not going to do it this year. So that's why the bad news is coming next year and not now. And so that speaks for a positive bias as the market opens today. And I looked at the futures before the market opened at 9:30, and they were indeed generally up, although they've been up and down the last hour right before the market opened. So I decided that I would flip a coin this day and enter one of these trades very nearly at the opening. Not exactly at 9:30. I think I came in at 9:38, which you'll see in the trade that follows here. So I decided I'm going along. I enter an OTOCO 938. I bought at 44.17. The target 44.30, and I put a stop market 3 points down, $15 down. So $15 is the worst thing can happen to this. I'm already up about $10 already. I bought at 44.17. And this entire trade, by the way, lasts for 1 minute and 48 seconds, if I timed it right. And I'm up $10.50, $15 on the trade already, and it's barely 35 seconds old, the trade is. So I take my stop and I move it up, and I get my Tastyworks mouse, and I can't believe this thing is 44.19, 44.20 right now. And so I moved my stop up to 44.1750. Why did I pick 44.1750? Because it's a free trade now. Nothing bad can happen to me in this trade, and cooler heads prevail when you have nothing to lose on a trade. I'm trading 44.22 right now, and so I move that stop up again. This time I'm going to click and drag that puppy up to about 44.20 and a half, and I'm trading 44.23 already. And I move the stop up. I eke it up just a little bit more here. Market's trading 44.22 right now, in 44.2350, and move my stop up to 44.22. And guess what? Just a very, very few seconds later, I get stopped out right about here, I think. There it is. I was stopped out of the trade there, made $25 in 1 minute and 48 seconds. And I went up all the way up to 44.2375. I had a maximum unrealized gain possibility of 33.75. I got $25 of it, about 74%, and I was very happy with that. Now I switched over to a still screen here. This is just a screenshot, no longer the live trade, but it's always fun after a trade, and I do it almost on every one of my trades. I go back and do what I'm doing now. I bring up the chart, look at what I did, see how I could improve on it, what I might have done better, what I might have done worse, all those things that go through your head during, before, and after a trade. So anyway, I got in the trade, to remember, at 9:38, and then got out at 9:40 for a 5-point or $25 profit. Now, this chart goes all the way out to about 11 o'clock right here. Now, you can see the market went way up to 44 938. So naturally you say, well, how come I could have made, over 90 or around a 90 or $100 if I'd held the trade for the next hour and a half? But it's not the type of trade that I would do that with, because it's just too volatile. And I'm going to show you what I mean. It's very easy looking at a chart like this to say, I should have, would have, could have done a certain thing, and I would have made this or made that. But now, remember, I've got the genius of hindsight, and that always makes everything easy, and it makes all your decisions look like they were less than they should have been. So you can't judge yourself with the genius of hindsight. And I'll kind of pick on this trade for a moment and show you what I mean. Now, I got in at 938, got out at 940, and then between 940 and 945, you can see right here, I went all the way back down to 44.18. That means I would have given up $20 of my $25 profit, and I would have to hang on through that to get on the other side and go back up with the market. Now, with the genius of hindsight, that looks easy, but in the middle of a trade, you had $25 in a minute and a half. All of a sudden, it went down to $5. What are you going to do? You're going to say, oh, no, it's going against me. You're going to exit, or you're going to hang in, and you never know. You can't go to the future and look back and say what you would have done. You can look at things you might have done, but you don't know until you're done with the trade, and that's what keeps it interesting. There's just no other way to say it. If I'd held this trade up until 11 o'clock at 44.38, I would have had a profit of $105. But that genius of hindsight, I got to tell you, will do a tap dance on your head. And you'll go crazy thinking about all the possibilities. Just look at the time here and the yellow highlight there. All the ups and downs and what I should have, would have, could have done with a trailing stop, and I might have done this and that. The possibilities are just mind-boggling. And that's the thing about trading is it happens real time. You don't get to look back with the genius of hindsight. And as I said, that's what keeps it interesting. And but also, you made $25 in a minute 48 seconds. If I'd been trading 4 contracts instead of 1, I would have made $100. And that's where you need to think about going. You can multiply. Everybody can multiply. This channel, we show you how to trade with 1 contract, usually, sometimes 2 or even more sometimes. But most of the time, small, affordable trades, because this is how you learn. This is how you get this valuable experience that you're going to carry into all the trades you do in the future. And you really can learn something from every trade by thinking about these types of things. It's so much fun to look at these trades after the fact and think about all the possibilities and things. And it's a wonderful way to learn because, it would have made a lot more sense to trade more contracts, the 2, 3, or 4 contracts, than it would to try to hold a trade for an hour and a half. And the logic for that is very simple. In an hour and a half, you're exposed to a lot of time, and that means you're exposed to a lot of risk. The more time you stay in the market, the more time there is for the unexpected to happen. And you're never going to find certainty, no matter how many technical configurations or trade indicators that you use. What a great trade today, and I hope you learned something. I really enjoyed bringing that to you. This is a great time to remind you to subscribe to the channel. We put up new trades every week, and also you can help me out here. If you want to see more videos like the one you've seen today, please hit the like button. I count the likes, and that's kind of like a vote for the subjects on future videos that I do. So subscribe, hit the like button, and hope I'll see you next week for a new trade. Remember, you can see the table of contents in my book, The Day Trading Micro Futures, on Amazon. Just click the link in the text below this video, and that'll take you to the page where you can look inside and see the table of contents. I really think this book can help you make learning these things, get all the terms and basic information you need all in one place, and you'll learn faster and easier that way. So please visit that link for the book link in the text below the video. I'm Don Singletary. Thank you so much, and I hope every day is a payday for you.